Hi, everybody. Ben Black here, founder of Akkadian and the Raise Conference. And I'm here today with a great and longtime friend of mine, Jim Andelman of Bonfire Ventures. Hi, Jim. How you doing?
I'm great. How are you?
Awesome, man. To start, why don't you give everyone a little background on yourself? And since I've known you for, I think, 20 years, I think I met you 20 years ago, like
More,
more than
more.
20 years ago.
Yeah,
Uh,
we
you know,
both moved.
I,
We both moved to the West Coast in '99, and we met
so
in
there we
Boston.
go. We're aging ourselves, and I've watched Jim create a bonfire, and I've talked about him many times before. I've stolen some of his slides. He doesn't know this, but I've stolen his slides from my own deck, and so he's a great guy to learn from about the tactics of creating a venture capital fund. So Jim, tell us about Bonfire.
Sure. Bonfire Ventures is a quite tightly focused VC firm. We only do B2B software, and we are typically leading a first priced round called Series Seed. Um, our goal is to be the founder's first call when they have a question or wrestling with an issue. That's not something you can mandate in docs. That's something you earn with trust, expertise, and responsiveness.
So when did you first start Bonfire? Like, how did it come about? Because I don't want you to thunder that you had a different fund before, and then you switched. So
So I am a glutton for punishment. So I actually founded two different micro VC firms. So I founded my own firm called Rincon Venture Partners and had three funds under that banner. Um, and Bonfire is effectively a merger of two predecessor funds. So I founded Rincon and sort of joined forces with a friend of mine named Mark Mullen, who founded his own firm called Double M Partners. We each independently developed a very, very similar investment focus. We were each other's most frequent co-investor from 2012 to 2016 when we officially decided to team up.
okay,
Um, and we joined forces very deliberately. One, because I think this is, um, VC is actually sort of executed better as a team sport. There are many very, very successful sole GP funds out there. For me personally, I know that it's helpful to have a sounding board, to have the diversity of opinions, to have someone else, with different background and experience that can recognize blind spots that I don't recognize.
hmm
Um, and um, and that I would just sort of enjoy life more with a partner and a team, because VC, even when you have a partner and a team, can be a reasonably isolating activity.
and
Because
people don't appreciate that.
once you get busy, you have your companies and your partner has their companies, and
Yeah,
there isn't a lot of slack capacity to just catch up on other
stuff.
stuff your teammates are doing.
All right, so
Uh,
let's go back and let's go back and talk about like Fund One.
yeah.
You guys decide you're going to get together, and you guys had a track record independently.
Mhm.
How big was the first fund, and how big was your first close in the first fund?
Yeah. So let's talk about Bonfire. Let's also talk about like my second Rincon fund, which is my
Okay,
first institutional fund, because that is probably more relatable to the person that's trying to like launch a firm
sure.
right now. We had the benefit of, some investors gave us credit for the three prior funds. Some didn't. Some said, hey, you're a fund one, we don't do fund ones. Some said, we do fund ones, but you two have never worked together before. And that's a risk we're not comfortable taking. So let's keep in touch and consider fund two. So to be specific, Bonfire One was we had a $60 million target. We closed it at 63 million. It started with a two-person investment team, Mark and I. During Bonfire One, we added a venture partner, Brett Queener, as well as a principal named Tyler Churchill. And then we've since added another principal named Jen Richard. So we are now a five-person investment team.
So talk to us about the makeup of your LPs in the fund one, or or the Rincon fund, whichever you think is most relevant. And how did you find them? What was the makeup?
Yeah,
Did you have multiple closes? We love to get down to like how do you build an LP base?
yeah.
That's what
So
we're diving into.
um, my uh, let's see, the how is ask everyone and anyone for intros and referrals. It is not, it is very easy to go on NFX Signal or go on Emergence's VC CRM and or go on Crunchbase or go on Traction or go on PitchBook and find a list of VCs if you're a startup, and you want to figure out which VCs are in the Bay Area that do seed and your type of business.
Yeah.
The LP world is much more opaque intentionally. A lot of these people don't have a LinkedIn profile. Our main sponsor at Cambridge Associates, which is one of the gatekeepers, has no online footprint. I don't know how this person does it. Have managed to stay completely off the internet.
Yeah.
And so it is harder to do outbound. And so it tends to be referral based. A great referral is from a manager. We VCs are called managers in the LP GP universe. To have successful managers, right? Those who have plenty of, who are routinely oversubscribed are the ones that are most willing and interested to share their LP relationships. And generally their LPs are probably very happy with that fund's performance. And so that's the best intro, right?
The best intro.
Other VCs who are already in the portfolio or in the stable of a particular LP. So you have to be willing to make the ask.
I'm terrible about asking people to introduce me to LPs, and very, very rarely do it. How do you do it in such a way that you don't burden people too much, or make people sort of feel like they obligated, or because the hit rate, I introduce people to LPs, I get asked to introduce people to GPs to LPs, and the hit rate's really low, no matter how well you do. How do you manage that?
Oh, it's amazing. I mean, just give an example. It's really hard to get net new LPs, even when you have an established franchise, if you will, or building a mini brand or wherever we are in our life cycle, and have great performance and have good referrals. We were very fortunate. One of our kind of anchor limited partners in Bonfire One is the Foundry Group. They brought on Lyndall Ekman, who was at University of Texas, who developed a very, very successful venture portfolio there. And the partners at Foundry Group, Brad and Seth and crew, had been making sort of commitments to seed funds and mentoring managers. It's a part of their really just sort of give forward mentality. And they realized that it could be more organized, it could be more structured, and it could be a product in their, an offering within their set of offerings. So they formalized that, they raised a bigger fund, and they allocated a portion of it to seed funds. And it's a cohort, it's a group of funds that we feel very fortunate and grateful to be a part of. It's, Manu at K9 and True Ventures and Union Square Ventures, Resolute, et cetera. So Lyndall and Jacqueline and the other partners at Foundry made a very, very, very generous with their introductions when we're raising this next fund. And it went great. We hit our hard cap. We were raising 80 to 100 on this new fund. We ended up closing it at 101. And I think we got 4 net new LPs.
Wow. So you mostly people coming back for more.
Institutional, yes. So again, we did a good job with Fund One. It is 2 elements of doing a good job. I think one is doing what we said we would do.
Yeah.
So this might be the slide you liked.
This is the slide I like, yeah, because I put it in my 10 favorite slides, and we absolutely have stolen it. Describe the slide. I wish I had it in front of me because I would show people to people.
Yeah, so think of it as there's tiles, and there's 2 rows of tiles, and the top row of tiles is what we said we were going to do when we fundraised. What was our average check going to be? What was our average ownership going to be? What sectors were we going to focus on, et cetera, et cetera. What was our pace going to be? And we had what we said and what we did.
Mm-hmm.
And, we were kind of spot on doing what we said we would do. And you don't always have that luxury because conditions change. Like right now, valuations are pretty fundamentally different in
Yeah.
B2B software land. And so, we're running a little hot on our entry price.
Yeah.
Um, but the institutional LPs all recognize the nature of the landscape. And so, maybe there's a little variation there, and that's the basis of a conversation. So number one, we did what we said we were going to do, right? We delivered to them the product that they thought they were buying, which is
Mm-hmm.
important, especially in advance of performance, which can take longer to show up. And also our performance has been good, right? The prior portfolios that are representative, same investment focus in the last 3 funds before Bonfire, continue to mature really nicely, and they're all top decile on TVPI. And the existing fund, for us, we just do B2B software. There's a really easy, like, universal metric around ARR. And so we can track, like, what was our entry point on average and where are they today? And that's a pretty good indicator of value appreciation.
Right.
And so, those are the 2 aspects I would say of performance, which is doing what we said we do, and the businesses in the portfolio doing well.
Were there any ways like you found in new investors when you talk about adding your net new, like that are counterintuitive, that things you never thought of, or the ways you end up finding new investors that you wish you had known before you started?
This is the hard part. There is so much randomness, like unbelievable randomness.
Yeah.
And sometimes you don't know until like the very last minute which ones are going to say yes and which ones are going to say no.
Mm-hmm.
There were a few that really seemed like a slam dunk to us, that were really eager and leaning forward early in our process, and then they just sort of trailed off, and we don't know whether that's because it was us or because it was them. There's a lot of things you can't, we don't necessarily see, and LPs don't necessarily show, right? There are some big categories in the LP base, right? There's high net worth, and those are most often the sponsors or the champions of emerging managers.
Right. Of
And
course.
high net worth doesn't just mean, a rich man or woman. For us, and really, I would think the sweet spot for a lot of the firms that are a part of Raise are, family offices, single family offices. I don't know if I coined this term or not, but I hadn't heard it before I said it. This idea of an institutional family office.
You got that from me in our last conversation.
Yeah. Okay. I've been saying it for a long time, but I'm happy to give you credit.
I'm just kidding. I'm just kidding. Yeah.
Where
I use the exact same phrase, and if I compare the world today to the world that you and I started in, if I go back and say, like, who are the LPs, when I was at Mavron, you're talking about Yale University was like the anchor of, and that was like an emerging manager then, right? And today you have this really large number of these institutional family offices that have their own investment teams,
exactly?
and they
Yeah,
have their teams, and they act just like an institution, and they many times can write checks. So did you have a number of those in your first fund?
absolutely. And our first, what I would call, my first institutional fund, uh, um, the largest LP there was exactly what we're describing, which is a self-made billionaire
Mm-hmm.
and his son, um, devoting their attention to a private investment portfolio, both funds and direct investments, and they employ a team that deploys VC on their behalf. And it was an intro from another VC, for which we're forever grateful, Stephen Dietz from Upfront. And actually, it was funny. He introduced separately. Mark and I were separate at the time. My partner Mark introduced this family office, Daher Capital, to a bunch of the LA VCs, and the 2 he chose to invest in were Rincon and Double M, my fund and Mark's fund.
So now we're combining. That's
Yeah,
perfect.
yeah, and
Did he manage to double the capital commitment, or did he keep the original amount?
uh, they have expanded all along the way.
Yeah.
And we were fortunate. We were very fortunate. Again, like Bonfire. So, with respect to that profile, that represents also those. That is, we've had Cambridge Associates seal of approval for the last 3 funds, and it is mostly their high net worth family office group. And so that is, if you lump Cambridge Associates all together, the clients, the LPs that came to us who are clients of Cambridge Associates, each one of them is sort of, $1 to $3 million, but all in all together, it's 15 million out of our 100, which is really material and wonderful. And those are also all family offices that take guidance from Cambridge Associates.
Talk to me about like how you got coverage. I have a specific question. The story when I was fundraising, for some reason, and I don't remember exactly how this happened, but I had gone to Pittsburgh for exactly 2 meetings, and I think I saw on Twitter or something reason that you were there in Pittsburgh, or you were going to be there that week, and we talked, and you were like, I'm meeting with like 9 different groups in one day, and I was like, how did you even get all those meetings? Like it was incredibly impressive. So I'm wondering about like tactically, like how did you go about, like you had a lot of meetings. Like how far did you go? Like how many firms did you have to talk to? Because I was so incredibly intimidated by the number of meetings you had in the same city that I went to, and they got nowhere. And I was just curious how you did it.
We didn't necessarily leave that city with commitments. Just let's be
I,
clear.
I have one investor, lovely investor in Pittsburgh. He was some of my favorites, but I was a big
I know
zero
you're
myself.
talking
So
about.
we had the same one. Yeah.
The so we maintain a list. It's a horrible version of a CRM. It's a Google Sheet
Yeah.
that we
I
all
like
collaborate
this
on.
Google Sheet.
What's
Yeah.
that?
Yeah, that makes me feel better that you're using Google Sheets because we are too.
Yeah. And we have probably about 150 institutional LPs that we are that we should be doing a better job maintaining a relationship with.
So you're doing the LP farming, like you're just talking to the LPs all the time.
Yeah. I mean, the hard part about that is like there's always good news around the corner. And it's always tempting to like wait for that next piece of good news so you can deliver, always it's like never just check in, right? Always deliver news. And this is advice I give to founders too, when they are, developing a relationship or even in a fundraising process with VCs, which is, never just call or email to check in, right? You call or email with news that demonstrates that you're better than you were last time they talked,
Right.
Like that you've made progress. And by the way, would love to, catch up about the fundraise.
For your $63 million fund, how many pitches did you have to do?
Oh, those 100 or so.
100.
If not
So
more.
you're not even close. We just had somebody on that was 600 pitches to get to their 50 million. So you had it relatively easy, my friend.
And we did. I want to be very clear. Like Mark had an LP base and I had an LP base.
Yeah.
We had it overlapped with one entity.
One person. Yeah.
And they doubled their commitment, which was great, right? They basically, it was part of my diligence. Like, hey, I'm thinking of teaming up with Mark Mullen. What do you think? And he's like, I think that's such a good idea that I want to be your biggest LP. What's a good LP? I was like, I'll let you know. And they are our biggest LP, and they've been a wonderful partner to us.
So last question.
Yes.
Somebody's starting out today, given where the market is. We have had a huge proliferation of new venture capital firms, and somebody's like, I got to build an LP base. What advice do you give them?
A couple of pieces of advice. One is get started with whatever you can get started with. I think the fundraising activity is a one of storytelling, and it is much easier, I think, for an LP to say yes to something that is more concrete rather than less concrete, right? Before you've made a single investment, it's a blind pool. They don't know anything, right? They don't know what you're going to invest in. If you've made 3 investments that are going to be a part of the fund, you've got 3 great case studies and stories to tell.
Yeah.
And so, a piece of advice number 1 is get started however you can. And maybe that's, on a warehousing deal where, someone will front the money and then contribute it if and when you hit a certain amount. It might be a small first close. It might be your own money where you're contributing, some assets. Sidebar, don't mark up those assets and contribute them at a higher value than your cost. Then you just look greedy. Right? Like, think bigger picture, long-term. If you want to be building a firm and not just raising a fund, that's what LPs are looking for. So that is how you have to behave. And then, as I said, hopefully there are VCs who have had a good experience with you, either as an angel investor or as an operator, or as another VC if you're spinning out of a firm or something like that. And so, how you treat people and your reputation really matters. And that has been the greatest source of all of our referrals, which is people that we worked with at the board level, had a relationship with, knew that we were good, believed that we were good, and were happy to share their relationships with us.
That's great. Well, Jim, thank you so much for taking the time to talk with us today. I really appreciate it, and I feel the future fund managers of America do as well. So thanks a lot, and we'll talk to you soon.
Thank you so much. It was a pleasure.